You say, okay, I have a lot of money, but you have no money unless you take profits.
When the first ever spot ETF was created for gold 10x.
And the only thing I really knew was Bitcoin at the time, so I just invested very heavily into that. Rode it all the way up.
What's up?
My name is Jeff. Even the creators have said it's going to be the predecessor of CBDC.
What that taught me was that I need to be self-sufficient.
A solid DCA investment strategy, and pretend the red sell button doesn't even exist.
We about to go up like.
Ladies and gentlemen, we are live.
Yo, did you get yourself a stream deck? Like, how'd you what do you do with these sound bites, bro? Because
while I was on my trip, I decided to see what kind of free sound bites are out there, man, and got a couple of them that I want to eventually start to rotate on the show. I think it makes it a little bit more fun, but I definitely like that one. So I think I'm gonna start using that a lot more often. So
because I was thinking about investing in a stream deck too, because the waifu has one for her streams, and that thing is pretty neat, man. The sound bites definitely make the show a lot more entertaining, especially when you come in there at the right moment. So that's pretty cool. Yeah.
Oh yeah, for sure. I'm gonna tell you what. Yeah, while just to close up that point, I'm gonna use another one at some point during the episode just to have fun with it.
For sure.
Go ahead and let's go ahead and rock and roll.
Yeah, well, thank you everybody for joining us for another episode of the DJ Roundtable here. As always, please make sure to like, comment, and subscribe to the show. Make sure you hit that little bell notification if you guys would like to get notified as to when we go live, because I'm a free fucking spirit, guys. So you're never gonna know when I might do one of these emergency meeting streams. But I really just wanted to come on today, me and Josh, to give you folks a little bit of a market update, because we did that wonderful stream with Sloth yesterday when we created the show. We went over a very, very condensed TLDR version of exactly what it's like to create a coin, how to set up liquidity pools, how to set up the pools in exchange. So that was pretty cool. And we didn't really get to do our regular Sunday show, which is totally fine, right? Thanks for Sloth for giving us all that alpha. But a lot of you folks might be wondering exactly what the hell is happening in the market right now, because if you folks remember, we spoke about this last week in the chat that a few of the guys and the gals had questions about, hey, when can we expect a dip, right? Like, what are we? We're coming up at the midpoint of the cycle, and it seems like there's a ton of indicators on the charts that are giving us some screaming signals that we're going to get a dip. And I was like, and Josh too, we were saying that if we're going to get a dip in the market, it's probably going to happen either sometime last week or this week, right? And lo and behold, as soon as the market opened this week, we headed down to $40,000 Bitcoin, right? Almost cracked $40,000 and below. So a lot of folks might be asking the question, hey man, is it, are we going lower, right? Are we, because there's a lot of folks speculating on the YouTubes and on the X, on Twitter Spaces and stuff like that, that we might be heading down to anywhere between 30 to 35,000, and then you have some of these perma bears out there selling at we're actually going to head back down to $30,000 Bitcoin, right? It seems like their price targets just keeps getting higher and higher. Before it was 10,000, and then it was 20,000, and now the perma bears out there are now at $30,000 that they're making their calls on. So, what do you think about what's going on in the market, Josh? Give me your initial thoughts about why do you think this dip happened? What are you looking at on your charts? What indicators were you seeing as to kind of give you a pretty good indicator as to why we were going to head down?
Yeah. We were talking in the green room beforehand, and even last week, I had sent you a couple text messages bouncing a couple ideas off of you, but simply the relative strength index, it wasn't sustainable, especially on the Bitcoin weekly chart. And that's something that we can go into a little bit later if you want me to elaborate a little bit more on it. I'm sure you're going to take the opportunity to explain it a little bit. So I'm gonna give you that opportunity. But ultimately, it was over 80 on the RSI weekly on
Mm-hmm.
Bitcoin. So, I mean, it wasn't sustainable. That, and there was defined bearish divergence on the Bitcoin daily chart. And, you know, typically those trends, when you see two identifying indicators like that, it's a pretty strong probability that there's going to be a reversal in the trend.
Yes, sir.
And that's exactly what happened.
Yep.
I sort of did the same thing on Illuvium a couple weeks ago, and I think I texted
I
you
remember
at that
that.
point.
You told me about that too.
Yeah. So I saw it defined. There was defined bearish divergence on Illuvium a week or two ago, and sure enough, I went ahead and sold a little bit of my bag at 119. And
oh man, what was the high? Like 121?
120,
That's not
121,
bad.
somewhere around there. So
Yep.
yeah, it's I want to get back into the market around, I think around 85, or once it hits 0.5 on the fib. I can't remember exactly where that is, but that's where I'm going to start sort of getting back in there and cultivating a couple more coins. So
Yeah.
But yeah, I mean, it's not rocket science. You just got to look at the volume indicators and the strength indicators, and you could see very easily that it was overbought, 100% overbought, and it wasn't sustainable. And I'm glad it happened, because if we had continued to punch up and that RSI strength indicator would have gone up, then it would have created a new scenario that we haven't seen in Bitcoin in the past. And again, if we want to get into that, that's something that we can get into a little bit in the conversation.
Yeah, for sure. Yeah. No, I mean that the Illuvium play was actually a lot easier to call than it was earlier this year, because if I'm sure you were looking at the same exact things that I was looking at, but earlier this year during the run up of Illuvium, like I think it was around early February or March, that move was so strong, but we saw no divergence on the larger time frame. So it was a lot more difficult to actually time our exit during that time. So a lot of folks were kind of holding, thinking that, hey, Illuvium was going to keep running up until like maybe 115 or so. It topped out like around 105, and it came all the way back down to $40. And actually, I think Illuvium did make a new bear market low sometime in like around July, I think it was. So this time around was definitely a lot easier to time our exits. I exited a little bit earlier than you did, but that was a damn good play, bro. Exiting at 119, and then I'm looking at around probably 80 is the lowest that Illuvium gets. Probably around the $80-$90 range as well. Because I don't think we spend too much time around these levels for Bitcoin at all. But before we get into the news and the charts, let's go ahead and say hi to some of the folks in the chat. No Money Mike, what's up? Ascending Man, glad to have you here, Nate. Mike asks, what are your thoughts and speculations on the RH stuff? Now, a few of the guys were talking about this in the chat, and it seems like the consensus from the gang and the broader, RH ecosystem and the folks in there, it seems like, I believe if the SEC does not follow through with on their end, like I think the date was around December 15th, that they're going to be able to drop the case against RH, right? Because if you have a certain amount of time to be able to respond to the other party, and if you don't do so, if you don't follow up on anything, well then the judicial system is just going to assume that you're going to drop the ball and they're not going to follow through. If that's what you're talking about, Mike, that's my thoughts on it. Josh, were you keeping up with that? Did you have any thoughts to share with Mike at all?
I really don't have any thoughts as far as what's going on with the SEC. I mean, it's anybody's guess. We could speculate and sit here and say, if things do this, then that could happen, and vice versa. I don't even leave that up to speculation. All I know is right now, it's a brand new coin. It's the new kid on the block. It's still in a strong accumulation phase. Absolutely. And it's going to pump. It's going to pump. All coins pump, especially once it's established that it's not a shit coin and that there is some strong use case for it. Once word gets out, and once a lot more money starts coming into cryptocurrency in general, we're just now starting the bear market, and we're already, what do we hit? 1.6 trillion, which it's only a 2x to the all-time high market cap on cryptocurrency. So we're still very early in the bull run, very early. We're still months away from the halvening. So yeah, there's going to be plenty of time to accumulate and just continue to accumulate until, you get to a point where, you're not comfortable accumulating anymore. And then, listen to your gut and just, sit back and relax. I mean, it has been a boring bull market. You know what I'm saying? Like, it's been boring because we made our purchases. Well, what I'm saying is it's been boring because like we've made a majority of our purchases back when prices were going through the floor. So a lot of people are starting to get trigger happy. And if you have, a steady stream of dry powder that you can keep putting in, awesome. If you've deployed everything and, you're just sitting back now and you're just waiting, hey, a lot of people are doing that also. So, but it's ultimately in the accumulation phase. That's what it is. And it's going to keep accumulating until it doesn't. And then one day we're going to get that Hulk candle and it's going to take off. So,
well, that's a really, really good point. A lot of our members, we kind of met a lot of our members, and all of us basically met during the very bottom of the bear market last year, right? And it's certainly the case that, especially if it's your first cycle, for you to be holding almost like what? It's been almost basically 2 years. If you've been holding that long, like for example, if you started accumulating at the beginning of 2022, you rode all the way, you rode the bear market all the way down, and the significant dips that we've had over the past year, when it comes to Bitcoin and some of the alts still finding new lows, there's definitely some anxiety and some, like you said, right? There's going to be a certain degree of trigger happiness for some folks, because it's been such a long time. But you always have to. This is why it's important. What we spoke about having an investment thesis in place, because whenever you feel anxious or uncertain, it's something that you can always kind of lean back on, right? You can always pull it up if you've got it written down somewhere and look at your investment thesis and say, okay, here is the plan. I'm going to stick to this plan, and I'm going to execute when it's time to execute, right? And everything else is just kind of background noise, just white noise that I need to phase out. Because if you're somebody who's trigger happy and you decided to go ahead and follow through with that and you pull the trigger, you're premature ejaculating, right? Because you're probably going to be in some profits, right? A lot of altcoins have made anywhere between a 2 and like a 6x, at least for the larger, for the mid and larger cap ones that we've been watching. Like for example, Solana, Illuvium, we spoke about. And so if you exited at this point in the market, it's not like you're not making good gains, right? Anywhere between a 2 to a 6x is still a lot better than you would have done in the traditional markets. But it's nowhere near the type of gains that you're going to be able to make when we get to the peak of the altcoin season sometime in 2025, right? Or even like Q3 of 2024, when things really start to take off. So yeah, man, definitely very good insight from you there. So thank you for sharing that with the gang. But yeah, let's we have a few people that pop into the chat. Cass, good to have you with us. Nate says y'all need to check the production chat. Put a screenshot of a funny thing that happened to to me. Let's see what Nate, there's nothing here in the production chat, buddy. So double check on that. Hey Sam, brother 64, good to see you, brother. Thanks for the stream, gents. You are absolutely welcome. Okay, cool. So like I said, I wanted to give you guys a little bit of a market update here as to what exactly happened during the market open this morning, why we got that significant dip in Bitcoin. So I'm going to go ahead and share my screen with you guys, because this is going to give you folks a little bit of insight into exactly what has been going on behind the scenes. So here we go. So this first piece of news came across my desk from CoinDesk. And it says here that Bitcoin fell early Monday, right, as soon as the market opened, validating the caution signaled by the options market last week. The 4% drop to 42K. It actually dropped a lot lower than that. If you guys see the charts, we almost cracked 40,000 in Bitcoin, right? But it has cooled the overheated crypto perpetual futures market, clearing the way for a steady ascent into the year end. A high funding rate, typically greater than 0.10%. For 8 hours is taken to represent excess bullish leverage or overcrowding of long positions. According to the data source Velo Data, funding rates for the BTC, ETH, and other major cryptocurrencies consistently tapped the 0.15% mark in the second half of last week, signifying an overheated leverage market. The situation normalized with the early Asian session market-wide price drop. It's a sign over-leveraged traders has been shaken out of the market. All right, so there you go. About par for the course, wouldn't you say, Josh? When it comes to the futures and people engaging with leverage, do you have any thoughts on that? Because it seems like these liquidation events happen every single week, every other week.
Yeah, especially those that are, paying attention to technical indicators. Absolutely. And what's interesting is, as you and I and other folks, I'm sure Niles is like this. We got other folks in the community. Boogie's probably the same way. That the more and more you focus and the more you learn and the better you get at identifying these trends, the more and more you're going to be able to start calling this stuff more accurately. So absolutely. It's not difficult to take a look at the relative strength index, see how Bitcoin is pacing, take a look back at past cycles and see how it's performed in the past and say, okay, well, this thing is extremely heated. So boom, that's when I'm going to execute this sort of action. This is when I can anticipate this to happen. And sure enough, it's a cascading event. So yeah, absolutely. It's par for the course.
Yeah, man, because I was waiting. Okay, well, we got the dip that we knew what was coming, right? We mentioned this earlier. If you were in the chats, we were like, hey, it's probably going to be sometime next week. And it happened. And so I was waiting for any type of news. I'm like, okay, when's the FUD going to come out? What's the news that's flooding everybody at the market? And then this is really the only thing that came across my desk. And I was like, oh, okay. So people who are over leveraged, engaging in futures markets got liquidated and it dropped the price. Oh, okay. Wonderful. Well, that's news to me, Sherlock. It's like, if you've been in this market long enough, you know that these kind of liquidation events happen all the time. And so what does that all mean for anybody who might not understand that? It means that there is really no FUD out there in the space that are scaring folks out of the market, right? Did you hear? Are you aware of any type of news like that, Josh, at all?
I'm not. You also have to keep in mind that sometimes this stuff is just situational. You know what I'm saying? We're coming up on the end of the year. People are tax harvesting. You know what I'm saying? It's a good opportunity now for people to take a look at their portfolios and say, okay, well, when I bought Bitcoin, it was at $25,000 a couple months back. Let me go ahead and tax harvest a little bit. Or, those folks that, purchased still 2 years ago at the top, they're still down. So, you got year-end tax games that are coming in also. So it's not always going to be based on FUD that you see the market come down. A lot of it could just be situational.
Absolutely. So very good point there. And then also, you have to realize that we mentioned this a few times during our past Sunday streams, that when you take a look at the on-chain data, the overwhelming majority of Bitcoin right there that's in circulation, right, they all sit within the wallets of long-term holders, right? We spoke about this, I think, 2 weeks ago, that the amount of Bitcoin that sits within long-term wallets that have not moved for more than a year just hit a new all-time high, higher than 70%, right? So nobody's selling their coins outside of the people who are getting liquidated because they're playing around with leverage out there in the futures market, right? And then add to the fact, like you mentioned, people are gonna do some tax harvesting, right? Because it's that end of the year. It's the time to do so. And obviously, we're watching all of the key indicators, right? Overheated RSI, both on the daily and on the weekly. Bitcoin pushing really hard against the top of those Bollinger Bands, right? And so it's not really surprising. But what that tells me, and what that should indicate to everybody watching, is, even though the title says, is it time to panic? It's not time to panic, right? Because everything that they could have possibly thrown at this market, they've already thrown, right? This bear market was really harsh for a lot of folks. This year exactly hasn't been, sunshine and daisies either. We spent a significant amount of time during 2023 still with the Federal Reserve still following through with their quantitative tightening. All right, we had a whole bunch of bank runs at the beginning of the year. We had obviously Gary Gensler and folks from Congress like Elizabeth Warren coming after the space and coming after very big players within the space. Ripple, of course, is very obvious. Then you have the stuff that's going on with Binance. And so it's not like it's been an easy year for crypto, right? But despite that, despite the harsh bear market, despite all of the FUD within 2022 and 2023, all right, you have the overwhelming majority of holders staying strong. And so if you're somebody who's new to the space and you're very unsure and you're very anxious, that should give you great confidence that the people who believe in Bitcoin and who believe in crypto are not going anywhere, right? And the price fluctuations that you're seeing on the chart, right? Because let's face it, this was about a 10% drop. You know, we hit a high of about 44,000, almost 45,000, and then we came back down to about 40K. So 10% drop is not it's not something to sneeze at when it comes to Bitcoin, right? Because it takes a considerable amount of money in order to move something with, you know, like, what is it? It's like 600. The market cap for Bitcoin is really high, right? That liquidity is so thick that it takes a considerable amount of money to push that price any direction. And so a 10% drop is not something to sneeze at. Okay.
Yeah, for sure. And just to add on to that, to keep it along the lines of, you know, we're talking about tax harvesting. We're talking about how these things just naturally flow. You take a look at what's on the horizon. I mean, we can almost reach out and touch a Bitcoin spot ETF right now. You know, we have bullish news around the corner. A lot of people, like my portfolio right now, I'm still down around 25%. You know what I'm saying? I haven't broken even yet. I'm not, you know, I'm definitely not down like I was, you know, but I am still a little bit down. But what I anticipate is this time next year, I anticipate to be in the green. Yep. So, you know, somebody like me, others that are in the space, others that pay attention to this sort of stuff, we understand that, okay, I'm going to utilize this tax harvesting now because I know next year I'm not going to be able to write this stuff off. Next year, yeah, you know, over the next year or two, you know, we're going to be doling out money instead of being able to, you know, write some stuff off, this, that, and the other. So we got bullish news coming around the corner. I mean, we got the halvening coming up, you know, 3, 4, 5, 6 months from now. That we got all these spot ETF rumors rolling around, and I feel like any day now, you know, people are going to come out and say something, which, you know, that's going to be a jolt to the market. So, yeah, and you know, when you take that into account, even if it did come down to 38K, you know, if it trickled down to 37 or whatever, you know, those resistance lines are, or I'm sorry, the support lines are.
Yes.
You know, it's not the end of the world. If anything, it's good. It's a great opportunity to buy in into the year for what's coming around the corner. So.
Yep. And speaking of buying, right, we, you know, for us at least, we recommend that unless you're somebody who's pretty adept at swing trading, any new capital that you're putting into the market should be that. It should be new capital, right? You shouldn't be selling the entire bag, hoping to buy in at a 20% drop, because you might not get that 20% drop. I'm going to be honest with you right now. We're way too close to the halvening. We're way too close to the predicted approval dates of the spot ETFs. And so the upside potential, right, that upside risk is significantly greater than any downside risk that the bears might be trying to sell you. Okay, so take whatever the bears have to say with a grain of salt. Okay, and obviously anybody who's overly bullish to you, take it with a grain of salt, because you always want to be. Josh always says it, right? You want to be prepared for every single scenario. But on the ETF note, there are a few things that I wanted to share with you as to exactly why I believe, one, why the market was overheated for a much longer period of time than it was supposed to be, and also why you, as an individual investor, should be pretty damn bullish over the market. So let me go ahead and share the screen with you. A second here.
Yeah, while you're pulling that up, just a shout out to No Money Mike. Said, "Hell yeah, Tane, I was feeling bad. You guys talking about being up 2 to 6x. I'm down 6% and thought I was down bad. No, man.
Bro.
No, not yeah. Don't even worry about that, dude. You know, some people might be swing trading and getting these 2 to 6x's that you see, the more degenerate folks, but they're only using maybe 5-10% of their bag. They're throwing in scratchers, and they're probably not even telling you about the money that they end up losing as well. So, you know, if you're up 2, 3, 4, 5x on one specific coin with a small amount, that's awesome to celebrate. But I can tell you right now that unless folks got in at the total bottoms and they played the market perfectly coming out of the 2021 top, you know, people are still going to be in the red right now. They're not going to be as deep in the red. I don't, Jay, if you want to talk a little bit about where you are, but like I said, I'm still in the red about 25%, but it's, you know, it's not something I'm worried about because I know that, you know, what goes down will come up and what goes up will come down. So, you know, it's just waiting it out.
Well, on my end, I can share a little bit of that. On my end, as far as like the mid and large caps that I'm holding in my portfolio, those are all up. So I'm actually I would say I'm about 25% down still also, but that's on the altcoin plays. And just specifically, it's within the Richard Hart ecosystem, and that's not anything against the Richard Hart ecosystem. We know exactly why most of us are down in that aspect, but obviously we know that is a project that's going to do well long term. So it's like, okay, 25% down on my mainly Hex, eHex, but it doesn't really matter because you know that token is gonna do well long term. And to Mike's comment, bro, I'm gonna assume that this is your first cycle, brother, because let me tell you right now, if you're anxious about a 6% dip in your portfolio, bro, that's nothing in crypto. That's nothing in crypto, right? You know, there's this meme with Richard Hart. You could have taken profits on a 2x, on a 2x, on a 2x, on a 2x 21 times, right? But as we saw in the bear market of 2022, you could have dropped 99% 3-4 times, as exemplified by Luna. Okay, they dropped 99% like 3 times. Okay, so down 6%, bro. You are golden. You are golden. So yes, you are certainly welcome for the confidence. And being only down 6% on your portfolio, that is nothing, bro. You are golden. Believe me. Dude. Well, give yourself some time to mature into the market, and believe me, next when you get to the next bear market, bro, and you see that some of the tokens that you might be holding are down like 85-90%, you're like, wow, I can't believe I was complaining about 6% and I was anxious about 6%, bro. But yeah, bro, you have absolutely nothing to worry about, man. Let's take a look at the chat. What's going on in the chat here? Sam says, yeah, 25% right now ain't no thing. You're absolutely correct.
Hey, and Sam would know about that because Sam's been in Bitcoin since you know the early 2010s. So I mean, he's seen money take off and he's seen money evaporate in the snap of a finger. So definitely listen to what Sam is saying there. Yes, sir. And we got another comment here from Mike. He says, this is my first cycle holding and trying to learn. I used to sell the bottom, right? And now you're not. Now you're not. You stick with us long enough. Anytime you're feeling anxious, bro, yo, go engage with people in the chat, man. There's always a group of folks in there who have been in this for a very long time. And if you're anxious, bro, and you want some reassurance, you want some hopium, they're going to give you some hopium. And it's not just going to be blowing smoke up your ass, right? They're going to tell you exactly what we're telling you here right now, that being down 6%, that's nothing in crypto. And they're going to give you some variables that are going to make you a little bit more optimistic, right? And we're going to go over some of that right now. So yeah, man, absolutely. It's being comfortable with the volatility in crypto is something that definitely takes time in the market, right? And as you mature as an investor, you're going to realize that. You're gonna realize that as well. So yeah, very good job for staying in here as long as you have, man. Because a lot of people exited and sold the bottom and will never look back again, and will never be able to realize the type of gains that this bull market is going to give us. So, good stuff. All right, I got you. Got your screen up, bud. Cool. So, talk about hopium, right? Analyst
This comes from Crypto News. BlackRock is holding meetings with the SEC about its Bitcoin ETF. Here is what we know. So this article and a few articles like it that I'm going to share with you guys here just contributes to the reason why we saw that market overheated for as long as it did before we got this dip earlier today, and why you should be optimistic. So BlackRock, so this meeting was held with the SEC. This was held last week of November, I believe. It was on the 20th of November, right? They sat down with the SEC. This included not just members from BlackRock and the Division of Trading and Markets of the SEC, and also members of the NASDAQ, right? So members from all three of these entities met together November 20th of this year. And from the little information that we know, the details surrounding this meeting was about the potential redemption models that BlackRock was proposing for their IBTC, right? That's the tickle. That's the tickle. Tickle. That's the ticker symbol for the iShares BlackRock spot Bitcoin ETF, right? And so here's the takeaway that I want you guys to grab from this, right? After this meeting, all right, BlackRock obviously filed a modified S1 form, which, if you were going to make an assumption, probably took into consideration the demands of the SEC as far as, hey guys, what is it gonna take in order for you to approve our spot by January 10th of next year? Gary says, I need you to do X, Y, and Z. And so after the meeting, the representatives of BlackRock files their modified S1, probably taking those things into consideration, right? That's number one. Number two, lo and behold, I'm going to go ahead and switch over to share this tab also. This comes from the block. Surprise, surprise, right? Fidelity holds its own meeting with the SEC about their own spot Bitcoin ETF, right? And what are the details behind the meeting, you might ask? Well, surprise, surprise. This was also to discuss the potential redemption models of Fidelity's spot Bitcoin ETF, right? This was held last week on the 7th of December, and they discussed, at least from what we know so far, exactly the exact same things, right, as the SEC discussed with BlackRock, right? Probably what it's going to take to get our spot approved by January 10th of next year, right? And then what happens? Right after the meeting, Fidelity files an amended S1 form, and I'm going to assume that it also takes into consideration the things that BlackRock did during their meeting with Gary and the gang, right? And then right after this was on the same day, I believe, right? This was on the same day. Somebody date check me on this, but this was on the exact same day, right? So after the SEC meets with Fidelity, I'm going to go ahead and share with you guys this article also. The Fidelity spot Bitcoin ETF gets listed on the DTCC, right? Under the ticker FBTC. So Fidelity Bitcoin spot ETF, right? And so I might just be cherry picking the data here. I might just be cherry picking the news, but it seems like a lot of ducks are lining up in order for a whole bunch of spot ETFs to be approved during Q1 of next year. And here's the thing, guys, right? This is not a coincidence. You know what happens after their ticker gets listed on the DTCC? Well, guess what? You know who else filed for a modified S1 form? VanEck. And for those of you who don't know, VanEck is another one of those fund managers who also have their own spot Bitcoin ETF waiting to get approved, right? A day after. This was on the 8th of December. After Fidelity files their modified S1 form, VanEck files their own modified S1 form. And once again, we're probably going to assume that these people are just copy pasting the variables from BlackRock and Fidelity, right? They're all copy pasting each other's S1 forms. So that come January 10th, when it comes time for the SEC to review these things, they're going to be like, well, there's not really much difference here. There's no reason why we're going to deny one over the other, right? And so here's the thing. Here's the question that I want to ask to you, Josh, and to the rest of the gang. Here's something to think about, right? Number one, because of the confluence of news and how similar the news between these companies are, do you think that this had something to do, right? This had a major contribution as to exactly why the market was so overheated, despite the fact that we had so many technical indicators telling us that we are overheated? And then also part two of this question is, how likely do you think that we spend a considerable amount of time dipping? And to what degree do you think we dip as far as price is concerned? Josh, do you have any insight on that, brother?
So I think everything that BlackRock, Fidelity, everything that these hedge funds managers, everything that they're doing right now, it's just a formality. I think there's a steady line of communication between BlackRock, Fidelity, and the SEC, and just getting all their ducks in a row and all this stuff. I do think that the surge in strength over the last 3 to 4 months primarily has to do with the fomenting that is going on around the spot ETFs. Absolutely. I'm not going to say it's 100% due to that, but a majority of it is. I think I would probably say 60% that, and I would probably say 20% people trying to get in before the halvening. So that answers part one. Part two, how much do I think that we could dip? I don't know, man. You know, I really don't have an answer, and I'm not a fan of really putting an amount on how much we can dip, to be honest with you. If I had to say, I wouldn't. I don't know. In my gut, I want to say it's going to be a pretty strong pullback, but there's a lot of bullish news that's right around the corner that could make me be very wrong about that. Just given how strong the RSI is run, given the fact that we are right around the corner for the ETFs to come out, and then the halvening is only 4 months away. So if I'm going to use a little Kentucky windage, I would probably say it would probably come down to the 0.5 on the fib level. Not necessarily a super strong consolidation like we would see if all those factors weren't in place. Because if all those factors weren't in place, I think it would be a pretty strong pullback. But I think there are a lot of bullish headwinds that we're going to be looking towards. And honestly, I didn't have that opinion until about a week ago, because I thought we were going to have a super strong pullback. And then just from talking to you, you're the one that was like, hey, well, you also have to consider the ETFs that are coming up. You also have to consider the halvening and all the bullish news that's right around the corner. So, I've sort of adjusted my view to, it's probably going to be a moderate pullback. That's what I would assume. But I'm more interested to know what you have to say.
Yeah, we'll definitely go over the charts to give the folks at home some idea of what potentially could happen in terms of price if we do pull back a lot deeper than the 40,000 that we had earlier today. But let's go ahead and do that a little bit later in the show. You mentioned that yes, we have a considerable amount of bullish news. And we also, I mentioned VanEck earlier with them filing for their modified S1 form, and something really interesting that I've observed from some companies, and these are you would call them boomers, right? They're probably in their 50s, 60s, etc. And what I've observed is that when it comes to their marketing, it seems like these people are trying to market heavily towards the Gen Xers and beyond, right? The millennials and Gen Zs and stuff like that. There's this was hilarious, man. I want to share with you guys this little piece of news here really quickly, because I thought it was actually pretty funny, and it was actually pretty good marketing on Van Eck's part, right? Because Van Eck. So this is not regarding their spot ETF, right? This is regarding their futures Bitcoin ETF. Oh, actually, no, this is for their spot. Never mind. I stand corrected. So they revealed their ticker. Jesus Christ, man, I can't speak English today. They revealed their ticker for their spot to be HODL, right? And obviously, anybody that's been in this space long enough knows that that's a very common colloquialism that we use in this market to hold on for dear life, right? And they even tweeted this a few days ago. It was, my Bitcoin ETF will bring all the baby boomers to the yard if it's approved. And then, so this is not just with Van Eck, right? There's a let's see. Here is who was it? Valkyrie, right? They're another fund manager, right? They have a future. So Valkyrie is the one with a futures ETF that is waiting to be approved, and their ticker for that specific futures ETF is BTFD. Once again, you'll be familiar with that because that stands for buy the fucking dip. Let me throw a question for you here, Josh. What do you think about the marketing plays of some of these companies? Because it seems like they know that the overwhelming majority of the investors in crypto and future investors are not going to be the boomers, right? A lot of big money might be coming from the boomers, but it seems like they know that a lot of the money that's going to come in the future is going to come from the Gen Xers, the millennials, the Gen Zs, and beyond, right? So what do you think about their marketing strategies here? Do you think that this is them trying to get in with the cool kids?
Yeah, and I know the line that you're talking about there. We covered a story on the show here probably 2-3 months back that we are in the midst of the largest wealth transfer that's ever occurred in American history, because every single day more and more boomers are dying off and millennials are inheriting that money. And it's going to come to a point to where that wealth transfer is only going to continue for probably the next 10 to 15 years. So millennials are just going to continue to inherit the money from the boomers as they continue to die off. And absolutely, look, if I'm a marketing strategist, I'm going to take a look at the market. I'm going to take a look at the trends, and I'm going to try to advertise to the largest swath of people that could potentially buy my product or my service. I mean, that's marketing 101. You know what I'm saying? And it's pretty established at this point that boomers are very, very stingy when it comes to how they invest their money. All right. The biggest thing for them is real estate. And then it's, the traditional 401ks and Roths and stuff like that. Like, boomers aren't selling their houses. They're just not doing it. Boomers aren't downsizing. They're not selling their houses. They're like, nope, if anything, I might move up, but the biggest thing that's going on right now is boomers just aren't selling their houses. So eventually millennials are going to inherit those properties. And we see, the trends and the differences between, how millennials like to use their money versus how boomers like to use their money. And the fact of the matter is that millennials are younger. They're in a position where they can be more risky and they can take more of a chance because they have longer to recoup that loss. And Bitcoin and the cryptocurrency market is exactly the play that they're probably going to be able to do. I mean, look at everybody on the panel. Everybody on this panel is pretty much a millennial. You know what I'm saying? So, and if you take a look at the vast majority of the folks that we have in our community, which if you guys haven't joined yet, make sure you guys go ahead and join bit.ly/degenerate_roundtable, all lowercase. Type that in, join the Telegram channel. But yeah, it's just that's what it is. The boomers, when they were in their 30s and 40s, they had 401ks and they had companies paying paying, much more in retirement. The interest rates were better. We're just not in that position anymore. And millennials and Gen Z and the generations that are coming after the millennials, they need to find ways to make wealth and to, grow their income. And more of them are going to look towards those higher risk but higher reward plays, which cryptocurrency just plays out in that role. What do you think?
Yeah. Well, my thoughts on it, I think, to be quite honest with you, a lot of folks like to make this a political thing, but I think it really doesn't matter what side of the political spectrum you are in. The younger generation has an extreme distrust, right? Doesn't matter if you're liberal, doesn't matter if you're conservative, they have an extreme distrust for traditional institutions, right? And so I think, to a certain degree, these big hedge funds, whoever they're running their marketing department, hopefully they're also younger people. I think they realize that because the younger generation has an inherent distrust for them, they know that they're going to have to shift their marketing strategies in order for them to get some kind of buy-in, right? And so I think that's the reason why they're engaging in meme culture. They're engaging in using these, like the sayings like HODL and BTFD. And I would say it's a smart marketing move, right? Because you're going to have to get some kind of buy-in from the younger generation, and it's not going to be from overly technical descriptions or just simple stuff, right? Because people like to associate crypto with good memes, right? As well as mad gains.
And you know what else? You can look forward to is seeing investment prospectuses being able to fit into like 140 characters or less. Like, playing to that less attention span and stuff like that. But yeah, using the mnemonic for using the phrases that we use that the younger generation likes to use, using emojis, using memes and stuff like that. I mean, absolutely. If you watch any movie, right, and you see that like 60 or 70-year-old that's using like the current slang and stuff like that, what's the thought that you have there? Oh, that person's trying to reach the younger generation.
Like, okay, boomer.
Yeah, exactly. Yeah, like if you see a 60-year-old wearing khakis and a button-up walking into a nightclub talking about a fire track, then it's like, okay, yeah, you're trying to tap into a different sort of thing going on. So, but yeah, I mean that's what they're doing. But yeah, you bring up a great point. The anti-establishment nature and the rebellion side. I mean, that's been every generation. You know what I'm saying? You think of the greatest generation in World War II. Yeah, it does. Yeah, it really does. You have cultural, you have sexual, you have all these different sorts of revolutions that occur. We've had cultural, we've had the sexual revolution. Hey, this could very much be the financial revolution. You know what I'm saying? It's tapping into that aspect. So,
exactly. Yeah, like the younger generation, no matter what generation it is, there's always going to be a degree of like, don't tell me what to do. Right. And Bitcoin and crypto in general is kind of like crypto in general is antithetical to the traditional establishment, right? It's like, you can't tell me what to do, right? You can't tell me how I'm going to handle my money. You can't tell me what to do with it. You can't tell me who I can send it to. You can't tell me how to spend it, right? Because it offers a degree of privacy. It's like, well, you're not going to be able to steal my information, right? So it's a big middle finger to traditional establishment, right? And it kind of falls in line with the ethos of young folks in general, right? Doesn't matter what generation you're in. So yes, very good points there. Let's go ahead and check on the chat. We had a few folks filing in. Will, what's up? Niall, he says, I can't speak English, but proceeds to use the word colloquialism. You know what, bro? My English is pretty good, but my fob just comes out on occasion, man. Right? So it's like my mouth moves faster than my brain can process the information sometimes, and my Filipino side just comes out every now and then, right? So, please, give me all the smoke, give me all the jokes. Will, what's up, Dre? Glad to see you in the chat, brother. I know that you bought that LL dip, man. I saw earlier, bro. So good catch. Nate actually showed a pretty damn good chart in the Telegram chat exactly when he bought into the LL dip. He was like, "Hey guys, you see this consolidation of price right now of liquid loans finding a price? Well, this is where you buy the fucking dip because the loan token just went up after that short consolidation period." So good on Nate, man. I know he says that he's not really a technical person, but that was a very astute observation from Mr. McGinnis. So yeah, man, absolutely fantastic data that he shared there with the Telegram chat. That's just a small taste of what you can get when you're a member of our Telegram. So make sure that you go ahead and click that link at the very bottom of the description to join our Telegram. So yeah, congratulations, brother. He says got that 0.001 position now. Absolutely wonderful, bro. Congratulations, man. Okay,
Hey,
let's go ahead and move on. Go
real
ahead.
quick,
Go ahead.
real quick. Just shout out to Scott. He said I'm keeping my RH tokens until the following bull market. Absolutely, man. That's the best thing that you can do is, and looking to time pays me if you want to do a slow drip, if you want to time, if you want a time-based unlock and stuff like that, go back and watch the Matty Allen video that we did with time pays me. That's a good strategy that you could use for that. And then shout out to Sam, of course. 2017, 100% up, 100% down swings were commonplace. So that's talking about, being up or down on your portfolio. That's what we were talking about earlier. So Sam coming in with that hot wisdom from 2017, the ups and the downs consisting of 100% one way, 100% the other way. So absolutely. You learn to stomach it though. The longer that you're in the market and the longer you stick around and the more experience you get, you learn to stomach that stuff. And I'll even throw little jokes out there in our Telegram chat where people are talking, oh, there's a nice pulse pump going on right now. And I'm like, okay, well, wake me at 1000x or wake me at a 10,000x. You know what I'm saying? If it's like a 10% pump, I'm like, okay, well, I'm going to roll back over and go back to sleep. So
yeah, right. Yeah, for real. And speaking of Sam, right? So this guy brought up, 2017, and we were talking about the liquidity and things of that nature yesterday with Sloth. You have to consider the fact that in 2017 and during the early days of crypto, that liquidity was really fucking thin. Okay, so when Sam says that he could see coins dip 100%, that was part for the course back in crypto, right? Even more so than it is now because there wasn't as much money in the market. So anybody doing like a pretty sizable sell or buy order can move the price several 100,000%. All right. So yeah, thank you for sharing some of that insight, Sam. And here's a guy in our chat right now who's been through quite a few bear markets and who stayed throughout, and now he's going to reap the benefits of being somebody who wasn't never fudded out of the market. Right. So thank you, Sam, for sharing. Speaking of FUD in the market, not really. But some people will think that it is. The last few things that I wanted to share with you guys here, you might have seen him on our thumbnail, Mr. Jamie Dimon, appearing in front of Congress. I think it was sometime last week, sharing exactly how he feels about crypto. And so let me go ahead and play this for you guys. A little short clip here. This was him and his new best friend, Miss Elizabeth Warren, talking about how trash crypto is. Let me share this with you guys right now.
Today's terrorists have a new way to get around the Bank Secrecy Act, cryptocurrency. Last year, an estimated $20 billion in illicit crypto transactions funded every kind of dangerous criminal. North Korea has funded at least half its missile program, including nuclear weapons, using the proceeds of crypto crime. And Israeli officials have confirmed that Hamas received millions of dollars through crypto transactions, including, quote, large sums from Iran. Mr. Dimon, you've been CEO of JP Morgan for almost 2 decades. Can you explain why crypto is such an attractive financial tool for terrorists, drug traffickers, and rogue nations?
I've always been deeply opposed to crypto, Bitcoin, et cetera. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance, and that is a use case because it is somewhat anonymous, not fully, and because you can move money instantaneously, and because it doesn't go through, as you mentioned, all these systems have built up over many years, know your customers, sanctions, OFAC. It's they can get bypass all of that. If I was the government, I'd close it down.
Let's give a hand to the gaslighting there. But go ahead.
Well, I mean, So, what are your thoughts on Miss Warren and Jamie Dimon's tag team pincer attack on crypto here, man? I have some of my thoughts on it, but I want to get your reaction from that video, bro. You're muted, my friend.
My bad. Hey, I had to give that applause for the gaslighting that is going on. I don't know if Jamie Dimon is trying to virtue signal here. I don't know what he's trying to do. Definitely had a hotkey error there, by the way. I'm just going to throw that out there. But I saw the confused look when I played the track. So I just wanted to had to give a hand for the gaslighting. Warren, I mean, we've talked about various congressional members and how they're just going to take an opposing stance. It's par for the course. I would expect something like this from Elizabeth Warren. I wouldn't expect her to be on the same side as being able to, use a currency that, for freedom of speech or freedom of travel, freedom to transact, all that different sorts of stuff. So, but to me, the biggest thing is just Jamie Dimon, man. Like, I don't know if he's trying to virtue signal, and I don't understand it. But I'm interested to hear what your thoughts are.
Yeah, few things about that clip that really caught my attention. Number one, here's a pretty damn good example of exactly that should tell you exactly how much some of these people pay attention to the market, right? During the beginning of that clip, Elizabeth Warren was like, "Well, you know what? Crypto, we know that they've spent over $20 billion funding illicit criminal activities," and she mentioned some of that stuff with North Korea's nuclear program, Hamas, etc. Sorry, my dear, but if nobody has brought it to your attention, a few months ago when you made the exact same freaking statement, the good folks over at Chain Analysis, let me go ahead and share this with you folks right now. And I shared this a few weeks back when this was big news. So I'm going to go ahead and refresh your memories here. All right. When Chain Analysis heard exactly the nonsense that Elizabeth Warren was spouting, they went ahead to go and correct the record. And it's not 20 billion. Okay. It's not 20 billion that went to these terrorist organizations or to fund anybody's illicit criminal activities. The reason why we know this is because you can go on the blockchain, and because these transactions are transparent, right? That's one of the wonderful things about the blockchain, right? Because things are transparent. Okay? It's not 20 billion. Any money that went to fund any kind of illicit criminal activities or any terrorist organization, let me actually get the exact number here. I believe it was just under 500 million or so. Yeah, it wasn't 20 billion. It wasn't even 8 billion. It wasn't even 1 billion. About 450,000 worth. Here we go. 450,000 worth of funds were transferred from the known terror-affiliated wallets. This is talking about Hamas, right? So it's not 20 billion. It's not 1 billion. It's less than $500,000. And yes, I know some people are going to be like, well, Jay, that's still a lot of money going to fund these terrible people. Well, yes, absolutely. I'm not arguing that. What I am arguing is, well, how much do you think terror organizations use the United States dollar to fund their illicit criminal activities, right?
I was just about to say that, dude. Give me your
thoughts on that, bro.
It was the U.S. dollar that funded Al Qaeda in the 1980s and their fights against the Soviets. All right, it was the U.S. dollar that was funding federal law enforcement to do domestic surveillance on parents at school board meetings. It was U.S. dollars that went to funding, pro-Nazi groups in the Ukraine in their fight against Russia currently. So, you can take all this negative spin all you want on cryptocurrency, but at the end of the day, you can't just focus on that. You can't focus on just the negatives because there's just so much negative stuff for the US dollars funded as cryptocurrency.
Yeah, and aside from the U.S. dollar, right? You brought up a lot of good examples there, right? Remember a few months ago, there was one. I think he was a senator. I think he was a senator. Maybe he wasn't a senator, man. But the exact nature of the news article was that this person, who was a public official, was very explicitly against crypto, right, and Bitcoin. And then he gets removed from office because they found out that he was taking bribes in form of gold. Remember that story? Right? And so it's like, okay, yes. Is a portion of crypto going to be used for illicit criminal activities? Yes, absolutely. But the amount that's going to be used for that stuff is not even comparable to how much the US dollar is going to be used, other foreign currencies, other assets like gold. Right? It's incomparable.
Elizabeth Warren isn't sitting up there talking about the $1 billion in Bitcoin that has gone over to Ukraine to help, fund that endeavor. She's not talking about how Bitcoin has been sent over to help the people of Maui, during their fires and all the different sorts of stuff. She's not talking about that. She's just talking about Silk Road and terrorist groups and this, that, and the other. And it's really just cherry picking to present a side that she wants to stick to. So, this is just politics. This is just politics. That's all it is.
Yeah,
it's simple politics. That's it.
And you know what really gets me upset, bro? Because it's like it's not like nobody did the work, right? You have people here at Chain Analysis who are presenting you objective numbers, right? This is math. This is stats. Right, that you could track on the blockchain. It's like, okay, we're going to show you exactly how much are going to the wallets of these known organizations, and it's not as much as you say. And the fact that she's spitting out the same exact freaking number over and over again tells me that she's not paying attention to what's actually going on, right? Because when you've been proven wrong and you still stick with the same story, did you actually look at any of the people who did the work to present you this data, right? So that's one of the things that's really upsetting to me, bro. And then let's go over to Mr. Diamond, right? Because I'm going to share with you guys another clip here. Jamie Dimon might be explicitly opposed to crypto and Bitcoin, but JP Morgan sure as hell isn't, right? Like you said, I don't know if this is some kind of virtue signaling. I don't know if this is willful ignorance or him being explicitly like malicious, because we know that JP Morgan as a whole is not shying away from crypto and from blockchain technology, right? But he's going out and his own investors, right? Some of the biggest investors within JP Morgan are in crypto, right? They're big holders in crypto. So for him to come out here and says the only use case for crypto is for like money laundering, tax evasion, and then he goes on a rant about like how these organizations don't adhere to KYC. Bro, where the hell have you been? Where the hell have you been? Kraken, Coinbase, Gemini, Binance, right? Well, maybe not Binance anymore because the U.S. is doing their damn hardest to phase everybody out of the market. Correct me if I'm wrong, but these very large centralized exchanges have very stringent KYC protocols. So what the hell are you talking about, bro? Okay. And on that note, let me show you exactly the nature of JP Morgan's involvement with crypto, right? So gaslighting, you said, Josh? Yeah. Jamie Dimon is definitely gaslighting the American people.
100%.
Here we go. I'm going to share this with you because this is a clip from Coin Bureau. Thank you very much for Coin Bureau for getting this data together, because this was certainly very illuminating. Let me go ahead and pull this up right quick.
And I already got it fully expanded, so once you click over, you'll be able to play it.
Altcoin Daily audience, and again, please send this to a friend. Somebody needs to see this.
Blow your mind right here.
Altcoin Daily audience, Bitcoin and crypto hodlers, do not be fooled. So understand this. Manipulation is very common on Wall Street. And what you need to do is actually watch what they do, not just listen to whatever they say. don't be dumb money. Because if I had been watching this and if I wasn't in crypto, I would think either I need to sell my Bitcoin or I need to not get involved at all. That could not be further from the truth. Did you know JP Morgan Chase has 10% equity ownership in Ethereum co-founder Joe Lubin's company Consensus, big Ethereum company? Did you know that JP Morgan is actually already using crypto technology to tokenize US Treasury bonds, mortgage-backed securities, and cash in the form of JPM coin, which is their private blockchain on Ethereum rails? And did you know, most importantly, Jamie Dimon has a history of market manipulation, budding Bitcoin, and then behind the scenes buying Bitcoin? Check this out.
On September 12th, Jamie Dimon says
This right here is wild,
fraud.
guys.
He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks, people listen. People listen. So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, right? The largest buyer was Morgan Stanley and JP Morgan. And that's not illegal.
He says it's a fraud.
It says he'll fire anyone that buys it.
Fire.
Yes.
And at the same time, his company is buying it.
His company is buying it.
It's just, I mean, so unethical.
And Elizabeth Warren is in cahoots with the.
All right. Give me your thoughts on that, bro. That was a lot. That was a lot of dirt about JP Morgan, right? Might not necessarily be about Diamond himself, right? But about JP Morgan. What are your thoughts, bro?
Yeah. It's just it's awesome that we're living in a world right now where, everything that's on the internet is pretty much stays on the internet. We didn't have the opportunity 20, 30, 40 years ago to have all the information that we have right now. And this sort of thing, I mean, it's so easy to spot, and just the manipulation aspect while you're continuing to purchase something and the intentional fudding. It's just, it's par for the course for somebody like Jamie Dimon, who will decide, who will publicly say one thing, but behind closed doors be doing something completely different. I mean, it's right up the road with Nancy Pelosi and her awesome stock picks, her husband's awesome stock picks, and just, that level of corruption and the level of manipulation at that level. It's just insane. What about you? What do you think?
Yeah, bro. It's like watching that stuff one after the other, because I was consuming a lot of the interaction between Warren and Dimon during his appearance in Congress, and then I think Warren was on Squawk Box a day after talking about the exact same damn thing, right? It's like she has this speech rehearsed in her head, and all the other data that is contrary to her opinion, right? And this is like objective data, right? Objective empirical data, stats and mathematics. She just doesn't want to have anything to do with it, right? And so what really upset me was it's like, okay, so we know that per Altcoin Daily, right? He showed there that so JP Morgan has 10% stake in one of the Ethereum co-founders company, right? And then we went over a few weeks ago the exact same article that spoke about exactly what JP Morgan is doing with their private blockchain, right? For their multi-billion, trillion-dollar clients, right? And so it's like they know. And here's the thing, right? I always say that I don't attribute to malice what I can first attribute to stupidity. But at this point in the game, seeing exactly how they're acting, I have a hard time believing that these folks don't have any type of malicious intent, right? Because when your company outwardly is publicly revealing their engagement with all of this aspects of crypto and Bitcoin, right? But then you go, it's 2023 in December. You appear in front of Congress and tell the whole world, right? Because you know that average people are probably going to be paying attention to this, right? They're not gonna go out there and go do analyze the on-chain data. They're not going to look at the charts. They're not going to look at stats. They're not going to look at graphs, right? They're not going to look at any type of investigative work. That they're going to hear you, right? Appear in front of Congress. They're going to hear Elizabeth Warren go in front of MSNBC, right, on Squawk Box, and that's what they're going to hear. They're going to hear that, oh, well, we know that Gary Gensler and the SEC going after crypto. We know that Elizabeth Warren is heavily opposed to crypto. $20 billion being funded for illicit criminal activities and terrorist organizations, and then you have JP Morgan and Jamie Dimon over here also talking about how much they hate crypto and how much crypto is a bad thing, and they're pretty smart and big players, so we should probably listen to them. It's like, bro, what you're saying when you're appearing in front of the news, and then what your company is doing behind the background are completely at odds with each other, right? And you as a CEO of Chase, you're definitely not unaware of exactly what's going on with your company and the people and businesses and the products and services they're investing in, right? And so I'm really having a hard time believing that you don't have any type of malicious intent, because I guarantee you right now that he's saying this to try and flood the market, but he's going behind people's backs and buying as much crypto as he possibly can.
And at the end of the day, all you have to consider is that for decades, Wall Street had a lock on every investment sector and manipulating the price, with the exception of cryptocurrency. Because cryptocurrency started as a grassroots sort of thing, and no institutional money came into it until maybe it first started coming in around the 2017 bull cycle. But then this past cycle is when you started to see large amounts of investment money moving in. So simply what they're trying to do is they're trying to accumulate the positions that they missed out on when they weren't taking it seriously, when they thought that, oh, this is just something that's going to phase out. Listen, there's going to come a day where Peter Schiff, all right, is throwing Bitcoin, where he's accumulating Bitcoin himself. It wouldn't surprise me right now if Jamie Dimon and Elizabeth Warren, if Elizabeth Warren was had some sort of contract or had hired JP Morgan, and there's some sort of Bitcoin accumulation going on, being stashed into a certain wallet for her or something like that. Like, that wouldn't shock me if news broke something like that. Not saying that's the case, but it wouldn't shock me. But at the end of the day, to wrap it all up, hedge fund managers, big banks, Wall Street, they have had the lock on all the investment sectors except for cryptocurrency. And now they're trying to be able to get in there to be able to keep that manipulation game going with cryptocurrency, just like they have with high-tech stocks, just like they have with the S&P, NASDAQ, and all those different sorts of things. And like with BlackRock, when it comes to rental properties, because they're sucking up property across the world, so it's just another sector that they're trying to get their paws into. And the easiest way to do that is to publicly tell people, oh, Bitcoin is a fraud. Bitcoin can only be used for this. But at the end of the day, they have holdings in it. They're investing in companies that have direct influence on cryptocurrency, or have strong ties with a certain coin or a founder or whatever. So
yeah, no, absolutely, 100% agree, right? And we mentioned this quite a lot in our chat and on the show, but what Josh said right there is precisely the reason why you shouldn't let them fudge you out their bags, right? Because this is, we know that crypto is here to stay. It is the final frontier, right? When it comes to finance, at least in our lifetimes, right? Like there's nothing that's going to usurp crypto within our lifetimes. And like Josh said, this is one industry where players like JP Morgan, like BlackRock, they do not have majority holding of the markets, and they cannot manipulate it the same way that they can. Josh mentioned it about real estate. Look, go if you wanna I don't know if you wanna see exactly how few people hold the majority of the land and real estate in the United States, take a look. Just type it in Google right now. Which companies hold the most real estate in the US and what percentage, right? And what you'll find is There are a handful. There are only a handful of companies out there that own the overwhelming majority of real estate and land in the US, right? Which means how much is left for the rest of us out there? Not very much. They can't do that with crypto yet. And it's up to you, right? It's up to us individually to not get FUDed out of our bags, because if we succumb to the FUD, right? If Jamie Dimon and Elizabeth Warren and all the detractors and the Peter Schiffs out there succeed in FUDing people out of their bags, then it's only going to be a matter of time when these big companies are going to be able to hold the majority share of Bitcoin. And that's definitely not what we want to happen. Not even a little bit, right? And so, yeah, don't get FUDed out of your bags, right? Because like if you, here's another thing, right? Go look at exactly how many companies own the majority of the beef production in the US. There's like 4 of them, right? And I think they're trying to merge, so there's only 2 or 3 left, right? You do not want that to happen with Bitcoin, right? Because right now, the people that the folks that exist in the middle of the bell curve, we still have control of this market, right? So don't let them FUD you out of your bags. Josh, did you have any thoughts on that before I move on?
So like the vast majority, the biggest difference between a Bitcoin futures ETF and a Bitcoin spot ETF is when it comes down to a spot ETF, there's going to be a certain amount of reserves that companies are going to have to maintain in order to offer a spot ETF. With futures, they don't have to have that certain reserve set. But once the spot comes around, that's when the reserves are going to be required. So when you think of BlackRock, you think of JP Morgan, Fidelity, Grayscale, all these companies who already have something in the works. And I don't necessarily, I mentioned JP Morgan there. I don't think that they have anything spot ETF wise coming out currently, correct? Right. Okay. So we can take them out of the, they're separate from, Grayscale, Fidelity, BlackRock. They're separate from them. But the main point is all these major institutions, these big banks, these hedge funds, they all understand the requirements, and they are all, if they have any plans at all to hop into the gold rush that will be cryptocurrency and the spot ETF offering, if they have any plans, whether it's immediately after, Bitcoin Fidelity get issued or whether it's 6 months later, they don't want to be late to the party. So they are already in a process right now where they're accumulating it also. So if you were to sit here and to tell me, if Jamie Dimon came out and said JP Morgan doesn't have a single Bitcoin, hasn't purchased a single Bitcoin, I would throw the biggest bullshit flag out there in the world. All these institutions are starting to collect it because they relate to the party and because they want to make the money that is going to happen in the gold rush over the next couple cycles. So, but that closes out my thoughts on that.
Yeah, no, 100% agree, man. So yeah, don't let these folks FUD you out of your bags, okay? Because they might be telling you one thing in your face, but behind everybody's backs, I guarantee you these people are buying up as much as possible so that they can control this market, right? So it's up to us to not let that happen. All right, so to close out the stream, let me go a little bit into some TA, just short and sweet. Give you guys a few potential targets if this dip is going to last until the end of the year, right? A little bit longer than what we might expect. Go ahead and share this screen with you. A second here.
While you're pulling it out, you want me to do some chat shout outs here?
Go ahead, brother.
Cool deal. All right, let's see here. We got Nate the Great hitting us with a off-topic sort of thing that when he was in Miami, he hung out with the mom of the guy who created Silk Road. There's definitely a story there. So can't wait to hear that sometime. Absolutely. Let's see. Niles coming in. Your angle is your transparent blockchain bad. Our non-transparent CBDC blockchain good. Good comment there. Good comment there. Let's see. What else do we have here? All right. You ready to hop into TA?
Yes, sir. Let's do it.
All right. And got it up for you.
All right. So we have a current high here on day 24 and currently on day 28 of our 60-day cycle. So if we are going to have a left translated cycle, you can expect price to keep consolidating or dropping down all the way up until probably at the latest, if we do have a left translated cycle, the earliest I would expect this cycle to end is sometime near the tail end of December, and probably extend as far as, let's see here, if we go all the way up to day 60, look at that, Saturday, January 13th, 3 days after the final deadline for approval or rejection of a lot of our spot Bitcoin ETFs, right? What a coincidence, okay? And so if we are going to have a left translated cycle, I expect us to consolidate or dip. Shit, man. At the latest, that January 13th, at the earliest, sometime around the end of December here, December 29th, Friday, December 29th, right? So as far as potential targets to enter the market, right? If you have some new capital on the side, or if you have been accumulating some dry powder and would want some entry points, I don't expect Bitcoin to drop any lower, right? Probably the next line of support, if we lose this band of price action, the next line of support I expect Bitcoin to hit is this area here of $38,000, right? And that's probably, and the reason why is we have that horizontal support resistance there, but at some point, Bitcoin is probably going to interact with this trend line. And if you were on our emergency meeting on, I think it was Thursday this week, right? That you know that this long-term trend line is the trend line that we have been forming since the end of December 2022, right? We reclaimed that trend line and we have started building momentum, right? By closing days and weeks above it. And so this trend line right here is going to form a significant support of Bitcoin. And this is precisely the reason why I don't think that we are going to get the numbers that the bears are shooting for, right? We've spent too much time building support and building momentum above this long-term trend line. We have a ton of horizontal support above it, and we also have some fibs. Okay, so if we do a simple fib retracement from our swing low here to our current swing high, right? So if we lose this trend line and this support at 38,000, a common pullback is this 382 fib level here of 37,000. So expect 37,000. That area between 37 and 38K to form as pretty strong support. Now, Josh mentioned earlier this 0.5 fib here. Oh, surprise, surprise. 35,000. Where's 35,000? That's our cycle. That was our last cycle low. What do we know? That cycle lows and cycle highs, once they've been broken, right? And price decides to come back down there, it's going to serve as some kind of strong support, right? So this 0.5 fib here of about $35,000 Bitcoin, expect that to also form as some kind of strong support if we do get anything lower. And like I said, I am of the opinion that we are not going to get anything lower than that $38,000 Bitcoin. Expect this 0.618 level here of $32,500 Bitcoin as the lowest that I'm probably going to see. Right? I'm gonna go out on a limb here and say that we're not gonna see anything under 30,000 Bitcoin until the next bear market, if that, right? Because aside from that 0.618 fib, look at this band of price action here for Bitcoin. Okay. Look at all of the cycle highs within that area serving as support, right? The people who have been sitting on the sidelines who are like, I'm going to wait until $30,000 Bitcoin to get into the market. I'm going to wait for $20,000 Bitcoin. I'm going to wait for $10,000 Bitcoin before buying back in. Those guys are not going to wait that long to pull the trigger, right? They've missed the boat. And if they somehow get another opportunity to buy $30,000 Bitcoin, which is the lowest that I expect price to go if we do head down that low, they're not going to miss the opportunity to buy back in, right? Way too much support here. Way too much confluence of variables telling me that we're going to find strong support at these areas that I mentioned today. So yeah, don't expect $10,000 Bitcoin anytime soon, guys. Sorry to sort of burst your bubble there if you're a bear and you haven't bought any crypto during 2023. but there's my story, and I am sticking to it. The upside targets still remain the same. $48,000 Bitcoin is our next target to the upside, right? And it could certainly still happen within December if this dip is short-lived. $48,000 Bitcoin is our next target to the upside, and for Ethereum, $2,500 for Ethereum, right? Before we close out here, some important dates. Tomorrow, the CPI comes out. That's probably going to be bullish for the market because the expected CPI report is to come in at about 3.1% versus the 3.2% in October. So the CPI report for November is expected to drop to 3.1%. And then the following day, we have the next FOMC meeting, right, on Wednesday. And the overwhelming majority of participants within this market right now are considering are thinking that Jerome Powell is going to hold the rates at 550. We're not going to go to 575, right? And so taking all of the stuff that we discussed here into consideration, CPI report coming in tomorrow, FOMC meeting on Wednesday, this dip is probably going to be short-lived. That's my opinion, taking all of the variables into consideration. Josh, do you have any thoughts on that before we close it out here?
What thoughts on what specifically?
Just the TA. Yeah, my own personal outlook. If you wanted to provide your personal outlook for what we might expect over this coming week with the FOMC, with the CPI coming out, then we'll close it out.
Yeah, I'm gonna show the RSI. I'm gonna sort of give a little explanation of that. Hang on, give me 1 second. Okay, there we go.
Sam asks, when are we going to get super chats? Soon, brother. Josh has the alpha on that, so you'll know as soon as he does. He's the one that does all that stuff behind the background, bro. He's Mr. Producer.
120, I think 123 more subs to go, and we will be able to unlock that. So that's what we got. All right. So for this specifically, man, and you know, we had a little bit of conversation in the green room, and we can keep going with that conversation. I'm not even going to look at the price right now. What I want to look at specifically is the RSI and why me and Jay, we were able to have conversations and stuff and take a look at the importance of the relative strength index going on in the market on any given time. Because if you were just to take a look at the Bitcoin chart and you didn't take a look at either the volume or the strength index or the MACD or any of that stuff, then you'd pretty much be throwing darts, you know, at a dartboard with a blindfold on.
Yeah, if you take shots in the dark, man.
Correct. Yeah, exactly. You know, because, you know, there's such fluctuation and all that stuff. So, yeah. But what I've done is I did a simple green box right here. All right. And what this tells me, if you go back and look through Bitcoin's history, each and every time that we have come to a cycle high, all right, we have gotten well into this green box area. All right. So we start right here with 2013, that blow off top. Look, man, we got all the way up here to 99 to 100% on the RSI. Now, this is on the Bitcoin weekly. Yeah. So, and then if you take a look over here in 2017, the blow off in December of 2017, we had a couple periods where we broke into that green on the weekly, but you know, that last final surge in December of 2017 was what blew it off. Right. And then if we take a look for the first time in Bitcoin's history, we got into this green area well before 11 months prior to the top. And what you've heard me and what you've heard Jay saying is that there was a significant amount of bearish divergence on the weekly that showed that a big macro trend was going to be reversing. Because all you have to do is take a look at this downward trend right here. Actually, hang tight. Now I'm marking it in the wrong place. So this is, yeah, that's December of 21. And then so we're going to come down here into here we go. So this right here, this was the the top of the last cycle. All right.
Mhm.
But you see this strong downward trend for the RSI. When if we pull down the price, what we can see is during that same time period, we were around here and it went up. So what this tells me right here, and I had sent you a text message a couple weeks ago, and I think given the amount of money that is in Bitcoin now, the institutional money that's going to be coming in, I have my own personal theory. I think that we're going to start seeing a whole lot more versions of this. This was the first time that it happened where there was a strong indicator of bearish divergence on the macro. And I think that that's going to be something that continues, because as adoption occurs, more and more money is going to come in, and it's just going to be a transfer where when Bitcoin had a smaller market cap, the euphoria and all the money making was happening in a a group shorter time frame, and it was happening in like this dance together, where to now it's going to be, the institutions trying to make moves ahead of the retail and vice versa. So, but either way, so this is what we mean when we say there's hidden bearish divergence, or when there's bearish divergence, strong bearish divergence.
Just bearish divergence.
Yeah, for sure. Just bearish divergence. Yeah. But if we delete this, what I want you guys to also take a look at is if we take a look at how high the RSI indicator just got on this last week, what we can see, give me one quick second. Let me delete this real quick. Here, I'll just hide it. I'm going to draw a horizontal line here. And so we're just going to draw the line there, and I'm going to try to make that stick out. We're going to make it, I don't know, let's make it yellow. That's kind of a bad line. But anyway, you can get the gist. If I expand it up this way. So if you look, the only time in the past that a mid-cycle weekly RSI has gotten up this high was right here in 2016. Okay. Now it was about a year and a half after the 2015 bottom. All right. So January 2015, the market bottoms out. And then about a year and a half later, in June of 2016, we start to see that big resurgence. We didn't really see that much strength in the last cycle. But what's interesting is if you look at where we are right now, all right, the last bottom occurred in down here. Where are we here? Okay, June of 22 is when we had, the lowest RSI on the macro for this current cycle. So that's where the bottom came. All right, and if you look at where
Josh,
we are,
you know what's
here,
interesting? You see how the RSI bottomed there in June and it started climbing.
Mm-hmm.
I guarantee you right now, if you look at the price chart, you're gonna see that's when you started seeing some bullish divergence on the price versus the RSI.
Correct. Yep. So yeah, that's ultimately that's what I wanted to just bring up, was that just a little bit of extra information. You guys really need to, when you're playing around with these charts, really, set the RSI, take a look at the volume, look how the volume's doing, and really get into more intermediate and advanced as your training and as your experience allows you to.
You need a momentum oscillator. Okay.
Correct.
You need a momentum oscillator. All right. Doesn't matter if it's the RSI, if it's the regular one, stochastic, MAC, whatever. You need a momentum oscillator, okay? Because you're going to be able to see these divergences when everybody else is trying to throw darts in the dark. So
correct. Yeah, and that is what's interesting, man, is just like you said, because I'm just now seeing it also. I pulled the chart away, but yeah. So June of 22 is when you had the RSI bottom, but we didn't have the price bottom until November, December of last year.
Yeah.
And that right there shows very strong bullish divergence on the macro.
Yes, sir.
And then boom, we started to take off. So it's like, man, you could write this stuff as you're paying attention
easy,
to
man.
it. You can see it. So yeah, we saw it at the bull top, and we saw it at the bottom also. So I personally think it's something that's going to continue. And I think I think the people that are going to separate themselves the most, the people that are going to be able to take the best profits, are going to be those people who can find those little indicators. Because like I said, I already got my green box set up. I got a checklist. All right. Number 1, are we in all-time highs? Number 2, are we in that green area? And number 3 is my mailman telling me about Bitcoin. If those 3 things are happening, you know, I'm starting my DCA out strategy 100%. So everybody needs to have a plan, because we're not going to be far from it. But go ahead with your train of thought there.
No, I was going to say completely agree, because like you said, right, you're going to see a lot more of that kind of stuff as mass adoption comes in, because you know what's going to form that bearish divergence on the RSI versus the price. It's smart money slowly but surely DCAing out of the market as the plebs, your mailman. Nah, I love my mailman, man. It does good work. But as the common folk who are just now getting in the market, buying $100,000 Bitcoin, that's what the smart. They're going to be DCE. They're going to be the exit liquidity of the smart money, and that's what's going to form that divergence, right? So you need a momentum oscillator, please. All right.
When your boomer parents or your boomer uncle starts coming to you and asks you to set you up a Bitcoin wallet, could be a little bit of a sell signal. Just throwing that out there. But yeah, you want to go ahead and transition into wrap? I can go first, and then you can close it out. Does that work?
Yeah, go ahead, brother. Yep.
Cool, man. Yeah. So we got what is it? CPI or FOMC tomorrow?
CPI tomorrow, and then
CPI
FOMC
tomorrow.
on Wednesday. Yeah.
Okay, awesome. So we're gonna have a more defined path, I guess you could say, with the information that we get. We'll be able to staple down a little bit more. So make sure if you guys haven't already join up the Telegram. Jay's going to be talking about that. He always puts on these video calls, and it's just absolute fire. So make sure you guys are joined up. Also, where are we? We are at Monday. So Wednesday, 2 days from now, 8:00 p.m., Will Stevenson will be hosting our special guest, who is Stephen Bates, author of Securing Wallets, book about cryptocurrency. So we're going to be talking about blockchain, cryptocurrency, and we're also going to be talking a little bit in the realm of positive masculine improvements in your life and stuff like that. Because from what I recall, the author, he's really big into that also. So that's some of the stuff we're going to be talking about. And then we will not have a Whiskey Wednesday on the 20th because we have a large team meeting to discuss a couple things. So we got special guest coming up on Wednesday. We're going to have our Sunday show. Then we're going to take that Wednesday off. And then on the 27th, we're going to have Will's mom in as a special guest. And the Friday prior, we're going to be doing the book club for that. Zenith's going to be running that. So we got a ton of different stuff coming up for you guys. You guys can find me on Twitter, on Instagram at Chocolate Taints. My links are in the description. Make sure if you guys haven't done so already, like, comment, subscribe on the channel, take that URL, put it all over your social medias, and join the Telegram, man. But yeah, that's where you guys can find me on Twitter, on Instagram at Chocolate Taints. And it's going to be exciting what we got coming up for you guys. Jay, what do you got, bud?
Yes, sir. Hey, as always, I want to thank Josh, and for our Mrs. Producer for coming on and doing this very, very short notice stream with me. I always appreciate them. I would not be able to bring you guys this kind of quality without them running things behind the background. Okay, they do a lot more work than I do, so big shout out to them. Thank you for all of you guys here on the live and those that are going to catch us on the replay. As always, thank you for spending some of your time here with us. I know that that's your most valuable asset, so we do appreciate that you spend some of your time here with us on this wonderful Monday evening. As always, you can find me on X at _P90Hex, agent_J Schroth on Instagram. And until next time, we will see you guys. Take care.